The XRP community has this superpower where we show up early to the party and then everyone else realizes we were right all along. We've been shouting from the rooftops for years now, saying, look, the second these regulatory chains get unlocked, the moment we finally get fair treatment and this crypto witch hunt wraps up, real demand for XRP products is going to go nuclear. And holy crap, it's actually happening. We're literally living through it as we speak. First day out the gate, and we're already watching these insane inflows pouring into the new XRP ETFs from Franklin, Templeton, and Grayscale, which I broke down for you yesterday. But hold on, because there's a whole other layer to this thing. XRP is basically obliterating everyone else right now. Cash is rushing in immediately, and when I say massive numbers, I mean genuinely staggering amounts. Not trickling in slowly, not tiptoeing cautiously, we're talking immediately. And here's why that matters so much. Investors are going crazy for XRP's technical features. They're obsessed with all the different ways you can actually use it, and they're grabbing exposure through any door they can find, which means right now, XRP is crushing every single other crypto ETF on the market. Yes, even Bitcoin. How's that taste, you little Bitcoin maxi bitches? Come on, how does that taste? Smeared all across your face, hitting every single taste bud. This is straight up vindication right here. Everything the XRP community has been preaching for more than a decade, the real world utility, the crazy efficiency, the worldwide possibilities. Mainstream finance is finally waking up to all of it. And this is literally just the start, because ETFs are only wave number one. If day one already looks like this, just stop and picture it. Seriously imagine what month one's going to look like. If this is the first day just for these particular funds, and sure, the original XRP ETF dropped back on November 13th, but if this is day one for these ones, and check out everything that's already gone down since November, can you picture where we'll be a full month from now? Can you wrap your head around what 12 months from today is going to look like? It's going to be absolutely ridiculous. So let me just say congratulations to every single person tuning in, because you cracked the code before everyone else figured it out. And honestly, that's the whole secret to building wealth through investing. Spotting the real value in something before the masses decide it's cool to believe in whatever that asset turns out to be. And naturally, XRP is what we're diving into here. That's the whole trick to winning at this, locking on to genuine value while everybody else is still wandering around confused before the masses finally piece together what's been staring them in the face. And here's a mind-blowing number for you. Less than 1% of every person who's ever walked this earth has touched XRP at any single point throughout history. And with basically the entire human population having never gone anywhere near it, the price still managed to explode up to an all-time high of $3.65. So tell me, what's your prediction for what unfolds as more people actually start jumping in? It's going to spiral into something completely bonkers. So honestly, watching crypto media finally catch up to what the XRP community has been yelling about since forever is pretty satisfying, which boils down to XRP actually freaking delivers. But look, I'll hand out credit where people deserve it. Big ups to the block. I'm legitimately happy they're broadcasting how XRP is absolutely humiliating Bitcoin's little bitch ass. Because Bitcoin is essentially the decorative pet rock of the entire crypto ecosystem. That's just the truth. On a pure technology level, it's hands down the most outdated cryptocurrency ever constructed. And honestly, there's nothing wrong with that. If Bitcoin wants to keep coasting as a store of value until the end of time, even if it permanently owns the #1 spot by market cap, I don't have any beef with that whatsoever. I'd actually root for that outcome. But people hopped on the Bitcoin train because of the specific things it offers, and that's completely reasonable. I'm just not going to sit here playing pretend like it's the magical solution to all of crypto's challenges when you straight up cannot use it for anything. You can't even execute what Satoshi Nakamoto originally sketched out in the Bitcoin white paper, which was turning it into a peer-to-peer cash system. You can't even deliver on that single core promise. It just exists as a store of value. Okay, so I need you to see this headline from the block because it's pretty wild. Grayscale and Franklin XRP ETFs each clock over $60 million in day one inflows as group outshines Bitcoin, Ethereum, and Solana funds. Here's where it gets interesting. We've got the actual numbers now, and XRP is basically leaving everyone else in the dust. Like, it's not even close. Get a load of this. Grayscale and Franklin Templeton's new US spot exchange traded funds both witnessed over $60 million in net inflows on their first day of trading via NYSE Arca on Monday, outshining other crypto ETFs. Grayscale's GXRP, which converted into an ETF from a closed-end trust, saw $67.4 million in net inflows, while $1.5 trillion asset manager Franklin Templeton's new XRPZ ETF attracted $62.6 million, according to SoSo Value Data. Now, Sanamit put out some analytics data that caught my attention. I've been sitting on this, thinking about what it actually means, and I have a few observations I want to throw at you. When you stack XRP up against everything else out there, including Bitcoin, man, it's a different story entirely. Listen, if you're sitting on XRP right now, today's probably feeling pretty sweet. Bitcoin folks, maybe grabbing some coffee and staying calm. That's all I'm saying. Moving on here. Combined with the $16.4 million and $17.7 million brought in by Canary Capital's XRPZ and Bitwise's XRP funds, the category saw a total of $164.1 million worth of net inflows for the day. Think about that number for a minute. $164.1 million flowing in during one trading day for spot XRP ETFs. This is the same coin that everyone kept saying would disappear from the top 10 and become worthless. They pushed that narrative for almost 5 years. Yet, here we are, watching these numbers roll in. So where do I stand on this? Look, I've had this opinion locked in for a while now. My whole thing was simple. If XRP manages to stay legal in the US, we were always heading toward moments exactly like this one. This outcome, I saw it coming from miles away, and eventually the price action reflects these kinds of developments. That's exactly why I'm planted right here. My XRP holdings aren't going anywhere, no matter how long the ride takes, because in my mind, this thing's basically a golden ticket. Picture winning the lottery, except someone hit the slow motion button on the whole experience. That's the vibe here, folks. My prediction, that chart's going to keep marching upwards, step by step, over the long haul. All right, here's another data point that matters. Since launching on November 13th, the PureSpot XRP ETFs have registered cumulative net inflows of $586.8 million and have yet to witness any daily outflows. Franklin Templeton, head of ETF product and capital markets, David Mann, described XRP as a digital asset that, quote, plays a foundational role in global settlement infrastructure, end quote. Did you catch what just happened there? Traditional finance just entered the chat. We're talking about Franklin Templeton here, which ranks among the absolute largest asset managers globally. Their history stretches back through multiple decades. The exact founding year escapes me right now, but trust me, they've been around forever. Their assets under management? Hovering around $1.7 trillion, give or take. And now they're publicly stating that XRP, quote, plays a foundational role in global settlement infrastructure, end quote. Well, yeah, obviously. Anyone tuning into this during 2025 needs to hear this part. Major props to you. Real talk, you deserve full recognition. The XRP community cracked the code on this way before anyone else caught on. Traditional finance and these institutional giants, they're basically showing up late to the party you've been hosting for years. That's the wild part. For those of you who've been diamond handing since way back, legitimate respect here. Your entry prices beat what these massive institutions are paying right now. Just think about that reality for a moment. This is wild. And check out what they actually say here. Notably, however, Blackrock has sat out on XRP and other new crypto ETFs, seemingly preferring to focus on its dominant Bitcoin and Ethereum funds, at least for now. So here's my hot take, and I don't even think I'm going out on a limb here. BlackRock will launch an XRP ETF. It's happening. Just a matter of when, not if. They're not about to hand over that entire slice of the pie to their rivals. Come on. But yeah, they've been dragging their feet, and I've got a theory I've mentioned before. Quick version so we don't spiral into a tangent. BlackRock's doing the old school Coinbase playbook. Cast your mind back to 2017. Wild times. Exchanges everywhere were in this mad rush, throwing up every coin they could find. You'd see platforms with 100 tokens, maybe more, just loading up their shelves. Meanwhile, Coinbase, they zipped their lips and kept things tight. Their whole vibe was, we're the grown-ups here. They cared a lot about image, especially when the world thought crypto was basically internet monopoly money or worse. Their solution, ultra minimalist. 3 coins. You walked into Coinbase in 2017, you got 3 choices. Bitcoin, ETH, Litecoin. End of story. That was the entire menu. Did they leave money on the table? Oh, for sure. Mountains of it in the short run. But look at them now. They've got what, a bazillion coins listed? Okay, not literally every single one in existence, but you get the point. They've expanded like crazy. I'm thinking BlackRock's got this whole strategy mapped out. They're playing it safe with just the big 2, Bitcoin and Ethereum, ranked by market cap. Here's where it gets interesting though. They're treading carefully because, let's be real, they're running the show as the world's biggest asset manager. $11 trillion. That's not a typo. BlackRock is absolutely enormous. So put yourself in their shoes. If anything blows up on us, even something small, we're facing serious heat. Given their position at the top, they just can't take those kinds of chances. The downside is way too steep. My read on it, and sure, this is me connecting dots, but I bet they're waiting to see other companies pull it off first. Let them be the guinea pigs. Which brings up an obvious question, right? I definitely wondered this myself at first. Why let your competition get out ahead? Why give them that early mover advantage? Then someone from the community dropped this insight on me, and honestly, it makes a ton of sense. They pointed out that BlackRock, being the absolute giant they are, can enter the market literally whenever they feel like it and immediately crush the competition. I'm not saying every other XRP ETF would vanish overnight, but BlackRock would vacuum up massive amounts of trading activity the second they launch, purely because of their brand power and deep roots in traditional finance. That argument, yeah, it's got me sold. I'm betting money this is exactly what's about to unfold. And when it does, buckle up because the acceleration is going to be wild. These XRP ETF figures we're staring at, already blowing my mind, and we're literally at launch day. This is the floor, not the ceiling. Wait till BlackRock throws their hat in the ring. That's when we're talking about a whole different ballgame. Now here's my favorite part. Yeah, I already spoiled it earlier, but reading the actual print gets me hyped every time. Peep this headline. XRP ETFs outshine Bitcoin, Ethereum, and Solana flows. Check these stats out. In comparison, the US spot Bitcoin ETF slumped back to net outflows of $151.1 million on Monday. A spot Ethereum ETFs attracted net inflows of $96.6 million, and a spot Solana ETFs brought in $58 million, extending their positive streak since debut to 20 days, totaling $568.3 million. XRP didn't just win, it obliterated the competition. Cryptos, or us, crunched the data, and if you're looking at your screen right now, those are the flow breakdowns sitting right there. There it is, XRP commanding $164 million at the top. Pure and utter domination. Hunter Horsley, he's the guy calling the shots at Bitwise, one of the shops that just launched an XRP ETF over here. He posted something about the $18 million milestone. Here's his tweet. $18 million of inflows into the Bitwise XRP ETF, ticker XRP, yesterday. Now about $135 million in the first 3 days since its launch. Grateful to investors and trusting Bitwise to steward their assets onward. I mean, those are some seriously chunky numbers right there. Props to Sosa Valley website for keeping tabs on all this. All right, now we've got something cool from Sentiment. They're an on-chain analytics outfit. This one's actually kind of fascinating. So you're looking at their chart right now, and honestly, it tells you everything you need to know about where the major crypto players are positioned at this exact moment. What you're seeing is called the 30-day MVRV ratio. Think of it like this. If you jumped in and bought any of these coins in the past month, are you smiling at green numbers or wincing at red? That's what this measures for XRP and all the others on your screen. And spoiler alert, almost everyone's still in the red. Fear is definitely lingering. Yeah, we caught a little bounce recently, but let's be real. People are still wobbly out there. You can sense the uncertainty hanging around. Breaking it down from what's displayed, Cardano's taking the biggest beating, sitting at about negative 19%. Sentiment's calling that extreme undervaluation territory. Chainlink's next in line at what they label strong undervaluation. Then Bitcoin and Ethereum are both chilling in mild undervaluation zone, each showing roughly 6% in the hole for anyone who bought recently. When you see MVRV readings tanking this hard, that's basically the market flashing a giant neon sign that says capitulation zone. And if you know anything about crypto cycles, you know that's where the magic happens. The tourists have packed their bags and left. The party's over for them. But XRP, man, XRP is playing a completely different game right now. Let me explain. So while other coins are deep in that bargain basement territory, which is actually good for future buyers, don't get me wrong, XRP is hanging out at only negative 4.7%, barely scratched. And you might be thinking, okay, so it missed its chance to get really cheap? Nah, that's not the read here. XRP just flat out refused to crater when everyone else was eating dirt. It had a choice, and it chose violence, or rather, chose not to collapse. Why is that happening? Because XRP has been this unstoppable force ever since it went absolutely nuclear last November. The holders, they're locked in. They're not even flinching. Meanwhile, you've got Cardano and Link going through this gut-wrenching washout phase where weak hands are folding left and right. But XRP's network? Cricket sounds. No mass exodus, no bloodbath. And every single metric you pull up about XRP just reinforces the same narrative. This thing is a front runner, plain and simple. It's actually kind of beautiful when you think about it. So here's another exhibit for the XRP case file when we're comparing it to the big dogs. Just more ammunition showing XRP is built different. I mean, seriously, look at the chart. It's holding like it's glued to the floor. That's authentic power. You can't manufacture that kind of performance. The numbers don't lie. Oh, and by the way, while all this is happening in crypto, traditional markets are finally catching a break after getting pummeled most of last week. Things are bouncing back a bit. S&P 500's climbing, Russell 2000's joining the party. Yeah, I was watching it earlier and boom, 2.2% jump in a single day. Now, for those of you who don't obsess over traditional markets like I do, that number might not sound crazy, but trust me, in the boring old stock world, that's like fireworks going off. We're looking at the Russell 2000 here, which is your small cap playground. And when small caps are ripping, that tells you money isn't just hiding in the mega caps, it's spreading everywhere. That's the kind of market participation you dream about. Oh, and NASDAQ 100 wasn't about to sit this one out either, jumped right in. So the Kobeissi letter drops this breakdown that honestly made my jaw drop a little. Here's what they wrote. Last week's market crash has been erased. The S&P 500 is now added plus 250 points since Friday's lows. Now above the November 20th high, before the crash that is, plus $2.1 trillion in market cap in less than 3 trading days. And this puts the S&P 500 just 2.2% away from entering new all-time high territory. The reality is that the AI revolution has only become larger. The Fed is cutting rates into a hot market, and smart investors want more assets. If you can eliminate the noise, this market becomes incredibly profitable. Own assets or be left behind. Okay, so why does this matter to you watching a crypto video right now? Because there's a fundamental truth about how money moves in markets. Stocks live in the risk-on category. Crypto, same neighborhood. When traders smell opportunity and start getting aggressive with their portfolios, these are the first doors they knock on. Financial assets during risk-on periods, this is ground zero. And look, you don't have to trust me on this. Go pull any macro chart spanning years. Watch how stocks and crypto basically mirror each other's movements. The pattern's been screaming at us forever. Now look, if you get really granular with the time frames, sure, you'll spot these random stretches where things seem disconnected. But pull that camera back, the correlation slaps you across the face. It's screaming at you. Here's where my head's at with all this. Unless you're genuinely convinced we're careening toward a full-blown recession where stocks faceplant, crypto follows suit, and everyone stampedes into cash and bonds because fear takes over, I mean, if that's not what you're expecting, and I'm certainly not, then what are we even stressing about in the near term? The trajectory is pointing up. Will we hit turbulence? Obviously. I'd be lying if I told you it's smooth sailing with zero pullbacks. But sitting here predicting catastrophe right now, that just feels disconnected from what's actually unfolding. Think about it. If equities maintain this momentum, are you really prepared to bet that crypto will just shrug and go, nah, not this time? After 16 plus years of moving lockstep, suddenly the pattern breaks? Everyone's favorite phrase, this time it's different. Spoiler alert, it never is. And let's talk Fed rate cuts for a second. Your personal opinion on whether cutting rates is brilliant or insane? Irrelevant. Wall Street wants cheaper money. Traders are practically begging for it. And when the Fed delivers, capital flows into riskier assets. That's the playbook. That's what happens. The setup ahead just looks ridiculously promising from where I'm sitting. The signals are flashing bright green. But hey, mandatory disclaimer time. I'm not your financial advisor. Don't go making trades because some guy on YouTube got excited about charts. That's a recipe for disaster. All right, I'll see you in the next one.